NDB Securities Rupee Roundtable with our special guest Dr. Indrajit Coomaraswamy, former Governor of Central Bank of Sri Lanka.
Hello and welcome to NDB's Rupee Roundtable. This is your monthly reality check on investing, personal finance management and economy. So today we are going to discuss a very important topic. On 20th March 2023, the IMF board approved Sri Lanka's EFF program. And 10 days later, the government of Sri Lanka had a presentation to bondholders unveiling plans in terms of debt restructuring. So in today's podcast episode, we intend to dig a little bit deeper into these areas. Our guest today, he needs no introduction. He is Dr. Indrajit Coomaraswamy, a celebrated economist and the former governor of Central Bank of Sri Lanka. Perhaps a lesser known fact about him would be that he used to captain Sri Lanka's rugby team, and under his captaincy in 1974, Sri Lanka emerged as the runners-up at the Asia Cup held in Japan. Dr. Coomaraswamy, welcome to NDB's Rupee Roundtable. We are absolutely very excited to have you here with us today.
Thank you very much, Vajirapani. I'm delighted to be with you.
Thank you, sir. So let's begin this discussion. So in the first section, we'll discuss the topic at hand. And in the second section, we'll take a few light-hearted questions, including your favorite book recommendation. Right. So in the first section, the topic discussion, I have a whole bunch of follow-up questions from the government's investor presentation. So we'll begin from there. Now, in terms of domestic debt restructuring, the government is looking at two main angles. One is to restructure the central bank balance sheet, and the other is a voluntary debt exchange for treasury bonds. Could you explain us what exactly is a voluntary debt exchange and what entails with it?
So, if I've understood a voluntary debt restructuring correctly, my understanding is that the government will have negotiations with the creditor group formed by the domestic creditors to work out what would be an acceptable way forward in terms of restructuring the domestic debt that is to be within the perimeter as far as the debt held by the creditors involved. It's voluntary in the sense that I think what they mean is that they won't prescribe any particular formula. As you know, there are various avenues for restructuring debt. You can have a maturity extension, you can have a coupon reduction, you could have a bit of a grace period, or you can have a haircut. So in terms of a combination of such approaches, the voluntary approach, as I understand it, is that the government will talk to the creditors to find a kind of a way forward which is acceptable to all concerned, but which also enables the government to reach the debt sustainability target set out in the IMF program.
For a voluntary debt exchange to be successful, Doctor, my understanding is that a higher participation is a must. So in your view, how important is government's communique in this endeavor? And perhaps what kind of sweetness do you think the government can offer to entice the bondholders in terms of having a greater participation?
It's absolutely right, Vajirapani, that clearly for the approach to be effective, we want to get as wide a participation as possible. And I think there will be negotiations between the debt advisors, the authorities, and the creditors. They've already started, I believe. But in terms of sweetness, I'm a little reluctant to prejudge what the government might do. So I'm going to dodge answering that question, if I may, because I don't want to kind of box the government into any kind of speculation on my part. But the principle is, yes, you need as wide a participation as possible for it to be effective. And two, you need to, in other cases, governments have offered various incentives to encourage creditors to take on a participation which is wide enough to make the restructuring effective.
Right. So now let's come to the other part of the domestic debt operation, which is restructuring the central bank's balance sheet. So currently, central bank's holdings in treasury bills stands at 2.7 trillion rupees. Could you explain us what exactly is restructuring of central bank's balance sheet, and whether it's going to impact the open market operations and perhaps the impact on the central bank's net assets?
So I think the government, the authorities, the governor last week did indicate that on the treasury bill side, only the central bank's holdings, which I think amount to about 62% of the total holdings of treasury bills, would be treated. And that treatment could, of course, entail issuing bonds, very long-term bonds, in lieu of the treasury bills, to be able to create some space in terms of cash flow for the government. So they will, I think, that will clearly have an impact on the central bank's balance sheet. But hopefully, the central bank has sufficient strength to be able to ride that through. And over time, the central bank's balance sheet can be rebuilt, and it will obviously have an impact on the central bank's net asset position. It could even turn negative. But again, from my understanding of the situation, I don't think there will be any systemic consequences of that development. But, I see no problem about taking this course of action. So I don't think there will be an issue there, because the central bank about 3-4 years ago did do some open market operations using bonds which were close to maturity. So that option is there. And as more treasury bills are issued afresh, that will also be an opportunity to do that. And the other thing is, what I'm not sure is where the perimeter will fall in terms of the central bank bills that are treated. Of course, these are less than 1 year or less, right? In terms of their maturity, so there isn't very much space in terms of excluding some of them. They all get included, or 60%. But it's 60% that gets treated. But everything will be converted into bonds. So there will be a reduction in the supply of treasury bills available. So the government will have to use the shorter duration bonds for open market operations and any new bills they issue going forward.
Okay.
Now, I'm kind of speaking from a position of great ignorance on this issue. So I hope I've got it right. If I haven't got it right, I hope somebody from the central bank will correct it for me.
So in terms of timelines, Doctor, now the government intends to finalize the domestic debt operations by May 2023 and external debt restructuring by September 2023. That's where the first IMF review also begins. So in terms of timelines, what are the milestones do we need to achieve in order to hit these deadlines?
So on the domestic debt, yeah, they're trying to they hope to finalize it in May. And on the external debt, if I'm not mistaken, they're hoping to get things sorted out by June, which is the test date for the program. By the test date, I mean that's the date, the cutoff point for all the data that it needs to be provided to conduct the review. So the actual review probably will end by September, but the test date is the 30th of June, and the government is hoping to have the external debt also agreed, that restructuring also agreed by June, end of June. So hopefully by the end of June, both the domestic and external debt will be restructured, and there'll be an agreement across the board on how that is done. Now, how will sorry, you asked me a second part of that question, which I have now lost.
Milestones, Doctor.
Other milestones. Yeah. So the milestones essentially are, I think, they clearly, most of that has already been done, right? If you look at the program, the IMF program, the fiscal measures that were to be implemented are in place. The last 100 basis point increase in the policy rates was the kind of one step that was left on the monetary policy side. And so by completing all the prior actions that were required in order to obtain the EFF, I think the government authorities have now pretty much completed the milestones in terms of policy actions. Clearly now the negotiations will have to take place as to what is going to be the scenario in terms of how the debt is going to be restructured, or if debt is going to be treated. I think that's the word they seem to be using.
Right. So an extension to that question would be, do you think the banking sector is completely out of the equation, or would they be made part of a debt restructuring process, perhaps in a mild way? What's your view?
No, I think the governor was pretty clear. He did say that deposit-taking institutions would be outside the perimeter. So I don't think any treatment of the debt owned by the banking sector will be considered for treatment.
Okay. So with that, we are coming to questions on external debt restructuring, Doctor. Now, in terms of external financing gap, 23-2027, during the program period, the external financing gap is estimated to be $24 billion, and the government intends to bridge nearly 70% of it, that is 16.8 billion, through debt relief. Could you give us more information on this debt relief and how will it be possibly implemented?
So essentially, to answer your question, I thought it would be good to give a little bit of background in terms of what the government needs to do to get on the road to debt sustainability. Before I tackle the external financing gap, maybe I'll lead up to it by talking about the overall effort that has to be made to achieve debt sustainability. Now, the IMF targets for debt to GDP are 95% by 2027, and for the GFN, it is 13% by 2027. Now, already the government has made a very ambitious fiscal effort in terms of moving towards those targets. So if you ask ourselves the question, how far have they got towards achieving that target? Well, on the debt to GDP, they have moved from 128.1% in 2022, at the end of 2022, to a projected 114.7%. So that what has already been done on the fiscal side is going to get us closer to the debt to GDP parameter as I say, from 128.1 to 114.7. Then on the gross financing needs, it has moved us from the 34.5% of GDP, which was the number for the end of 2022, down to a projected 19.8% by 2027. Now, but that one figure we have to get down to 13%. So there is still an effort that has to be made through debt restructuring, domestic and external debt restructuring, to achieve the IMF parameters. So we have got part of the way through the fiscal effort, but there is more to be done. So that's what has to be done now. So we talked about the domestic debt restructuring. So that has to take part of the load, clearly. And the residual has to come through external debt restructuring. And there, clearly, whatever is agreed through negotiation, through voluntary approaches, etc., has to get us to those numbers, which are the IMF parameters. Now, the external finance, despite what is happening, there is an external financing gap that is there over the next number of years. And that external financing gap, as you said, is about 23.6%. Dollars, 23.6 billion, not percent, 23.6 billion. Now, of that, again, as you said, about 16.8 billion is going to come through external debt reduction, and the remainder is going to come through new financing from the multilateral fund institutions, and that amount is 6.75 billion. So 6.75 billion from multilateral financial institutions. Hopefully they're going to provide that money, but then we have to do the external debt reduction to hit the 16.8 billion that is there in the program as it stands. So there again, we would be looking at what we can do with bilateral creditors, the Paris Club and non-Paris Club, and then also what we can do with the private creditors, including the ISBs, etc. So the external credit that has to be treated amounts to basically 21.9 billion dollars. Of that, bilateral creditors account for 7.1 billion, and for private creditors account for 14.8 billion. So those are the amounts that need to be treated, and those are the amounts that have to be negotiated with these groups of creditors, with these two groups of creditors. So that's where we are. And in terms of financing, we are expecting 6.75 billion from the multilateral institutions, and that is basically the IMF, World Bank, and ADB.
Doctor, I have a bit of a confusion there. Now,
yeah.
Like you said, in the investor presentation, the government expects debt relief close to about 16.8 billion during the program period, whereas in the IMF staff report, March 2023, they expected debt relief of 14 billion as per their illustrative scenarios. How should one understand about the difference between these two numbers?
The IMF one was an illustrative number, which I guess would have been worked out some months ago. It would have been before this staff level agreement in September. So that number was probably worked out somewhere around, June or July, I would imagine, or latest August. So the present number, which was in the government presentation this time, would be the most up-to-date number.
Okay.
I don't think there would have been any methodological or fundamental differences. It's just that this is a more updated number, I imagine. That's what I would say.
Now the next question is external bondholders. In your view, how do you think the external bondholders will look at this new proposal in terms of the expected debt relief and the proposals for a DDR. I'm asking this especially in the light of a Bloomberg article that was published last week, and quote unquote it said that the major Eurobond holders like BlackRock, Pacific Investment Management, they are set to tussle with Sri Lanka as they want local bondholders also to take a bigger burden sharing.
So I'm not quite sure when that article was written, the Bloomberg article was written, whether it was written before or after the government's presentation last week. So, I mean, we will get all kinds of negotiating positions announced by the different groups of creditors before as a negotiating stance. I mean, we saw, I think, the private creditors trying to put a cap on how much the restructuring should be, how much of the GFN should be accounted for by them. So all this kind of stuff will go on, I think, while each group sets out its stall in terms of its initial negotiating positions. But the effort that the authority, the governor and ST spoke about last week is a pretty significant effort in terms of domestic debt. Now you must remember, domestic creditors have already taken a very big hit through the depreciation of the currency, through interest rate movements, etc. So whatever is being done now is on domestic debt restructuring is over and above what has already happened. So that needs to be taken into account. And the second point is, you don't want to push domestic debt restructuring to the point where it creates financial instability. That's not in the interest of the external creditors either. Because if the financial sector gets into trouble, and we have a financial crisis over and above whatever there is at the moment, the multiple crises that the country is coming through at the moment, then clearly that's in nobody's interest, because the chances of the external creditors getting repaid will also be undermined. So it's in their enlightened self-interest not to push the domestic debt restructuring to a point where it creates systemic instability.
Correct.
Particularly in the financial sector.
Agree. So, Doctor, my next question is regarding banks' exposure to Eurobonds, so international sovereign bonds. Now, banks, they hold about 10 to 12% of the Eurobonds, which is fairly substantial. And what we hear is the banks have requested to be paid in rupees for their exposure in Eurobonds, just like it's happening for Sri Lankan development bonds. Now, I'm trying to understand the impact of this, because the arguments against for something like this would be, will this breach the principle of equal treatment when you look at the external bondholders? But the argument for this proposal would be, well, if the banks are paid in LKR, there will be more dollars in kitty to serve the external bondholders. So eventually, the amount and the quantum of debt relief they have to take will be less. What do you think, Doctor?
Yeah, so I think basically one of the principles is that now looking at it from the perspective of external creditors, because you're asking me whether they would have a problem with this arrangement because it does breach or seems to breach this principle of equal treatment. But for them, what they'll be interested in is whether any restructuring that takes place reduces the quantum of FX available for them, right? So if you have a certain pool of FX and you do not divert some of it to repay your domestic creditors, then the amount of FX available would remain would be greater for the external creditors in terms of settling them. So then, intuitively, you would think that would reduce the need for debt reduction on the part of the external creditors. If some of the debt has been settled in dollars, then the amount of debt that has to be treated in foreign exchange that has to be treated is reduced. And therefore, the restructuring that has to be incurred by the external creditors should also be less. So in that sense, I don't see that they would see that as a problem. But the question is whether the domestic creditors will want to accept rupee settlement. Because clearly that would have implications for their external positions.
Correct. So now let's talk about the elephant in the room, the risk of holdout creditors. What are the risk scenarios we should factor in, do you think, Doctor, especially when we are going down this external debt restructuring road? Now, could holdout creditors like the Hamilton Reserve Bank, could they end up being like the Elliott management who delayed the debt restructuring process in Argentina in 2014?
I don't think so, because at the moment, the creditor group that is being formed by the major parties in terms of those who hold our ISBs have been very positive in their approach. The amounts involved are not very large in the global scheme of things. They're significant for us, but in the global scheme of things, these are not very large amounts. And my understanding is that most of the creditors want to get this done quickly. In fact, they have shown impatience. They've felt that the process has not gone as quickly as it could have done. They have even been a little critical of the IMF in terms of the IMF being too rigid. Of course, the IMF has a different perspective, right? They have to make sure that at the end of the process, we have achieved debt sustainability because they are using public money to support us. So that is their perspective. But from the perspective of the private creditors, they want to get this done as fast as possible and move on. So I don't think you're going to get really a bottleneck emerging in that sense. I don't anticipate there being an impediment. So far, there have been no noises that have emerged other than Hamilton Reserve. And in that case, there was a judgment that went against us, but that is not fundamentally so. So I don't anticipate there being a problem.
Right.
Because most of our creditors, we had some very good names amongst our list of creditors, and they want to do this in a cooperative and constructive way. And they see Sri Lanka as a country from which they can make money in the future. They want to restore normal relations and market access for Sri Lanka. It's not going to come immediately. We will need to establish a track record before we can go back to the market. But many of the more significant and well-known creditors in our books still see Sri Lanka as a country where they can make some money in the future.
Okay. So with that, we come to the end of the questions we have in terms of debt restructuring. Next, I would like to look at macro high frequency numbers in terms of macro outlook, what your expectations are. So let me begin by asking now, Sri Lanka, we hit the rock bottom last year. Gravity defying inflation, and the rupee emerged as one of the worst currencies in the world. Energy crisis, essential food shortage, political instability, just to name a few. So fast forward to today, a lot has changed. In your view, do you think Sri Lanka is out of the woods yet?
I wouldn't say that Sri Lanka is out of the woods, but I think we are on our way. We are moving in a positive direction. Because if you look at some of the indicators, the contraction in growth, while it was 7.8%, which is not good, was still somewhat less than what the multilaterals anticipated. I think the IMF was anticipating 8.6% contraction, the World Bank 9.3%, we came in at 7.8%. So it was somewhat better than anticipated. Inflation is on its way down faster than anticipated by the IMF. The interest rates are trending down. Market interest rates are trending down. Reserve build-up has been faster than anticipated in the program. It's now, I think, the gross international reserves, including the PBOC swap, are about, I think, 2.2, 2.3 billion. So that is usable reserves of close to 800 million. When you think that on the 12th of April or 13th of April, when we had our standstill, debt standstill, reserves were less than 50 million. And so usable reserves are now gone up to close to 800 million. So these are all very positive developments. And so in terms of macro high frequency indicators, you can see a perceptible improvement, and things seem to be moving in the right direction. But I don't want to underestimate some of the issues that still exist in the real economy, and also that exist for people and families. Clearly, poverty has gone up. It almost doubled during the course of 2021, if I'm not mistaken, and increased again in 2022. Employment also has been affected, particularly in the SME sector. So all those issues are still there. But the pressure coming through to people is lessening in terms of the rate at which it was increasing earlier. Because prices are not going to come down. Okay. But at least the rate at which the pressure was increasing has eased off a little bit. But so we still have a long way to go. And most of all, we need to do the stabilization. The IMF program is to stabilize the economy. And there are signs it has done so. But we've stabilized the economy while it has been contracting at the rate of about 7.8% last year. We need for the economy to have these kind of positive macro developments while it is growing by about 3 or 4%. So that's still to be seen, because to grow by 3 or 4%, we will have to relax the import restrictions. Now that will clearly create demand for dollars, and whether that will begin to put pressure on our external position and eventually pressure on the currency, etc., is yet to be seen. But on the plus side, the inflows are increasing. We are seeing tourism improve, remittances improve. We are going to get money from the multilaterals. The IMF money, the first tranche has come in. The World Bank, I think the first tranche will probably come in, in about a month's time, in May. ADB also, I think, are trying to do it as quickly as possible. So those monies will start coming in. And Japan is considering, I'm told, assistance for us as well. So on the supply side of the FX market, there are inflows coming in. But as the economy stabilizes and improves, it will start sucking in more imports. It will need to get more imports to be able to grow faster. And so we will have to relax some of these controls, etc. So how that balance works out is what we'll have to wait and see. But we've made a very good start. I think the central bank, in particular, and the Treasury have done a good job so far in terms of stabilizing the economy. We need to keep going. And most of all, we need to make sure it's done to increase the growth potential of the economy. Because right now, I think the growth potential has fallen significantly, exposed to the pandemic and the other crises that have emerged. So I should say the growth framework has to be strengthened so that the growth potential is taken back up at least to 3-4%. It used to be 5%. I don't think it's 5% anymore. But we need to get it back up to 3 or 4%, whereby we can have 3 or 4% growth without fueling inflation, without creating pressure on the balance of payments and the currency. But we are on our way. We're on our way. But we have to keep at it.
Right. So, Doctor, in terms of inflation, what is your outlook for inflation this year? Could inflation moderate to a single-digit level as communicated by the governor?
Yes, I think so. I think because There are a couple of things. Already it has come down from the peak of 74%, 75%, down to now 50%, though there has been a little bit of a slowdown the last month. But I think it will keep moderating, particularly because from about April onwards, there are going to be strong base effects. Because last year, from April last year, you saw the currency depreciating very rapidly, and that flowed through into price pressure. And so that surge in inflation in the sort of second, third quarter of last year, the base effects of that surge in inflation will work in our favor this year. So, in addition, I think we're seeing, global prices also easing. Oil prices have eased, and eased to the point where I'm told now Saudi Arabia has, just today I thought I heard that Saudi Arabia is actually reducing its production, which is an indication that there is downward pressure on oil prices. So as long as that doesn't turn things around too radically and oil prices keep coming down. So and already we are seeing comments from the Minister of Power and Energy that the price formula will give us lower oil prices, which will be announced this month, and the 6-monthly automatic adjustment of electricity should also bring about a reduction in electricity prices. So those will flow through to the rate of inflation too. So there are a number of positive things which I think are going to make it possible for the inflation to hit the single digits that the governor and the central bank have been talking about.
Right. So with that, in terms of exchange rates, there are two parts to this question. What is your near-term expectation for USD LKR, especially since we have seen a bit of volatility since lately? And second part is, now historically, Sri Lankan rupee has depreciated about 3 to 4%. That was like the long-term average. So, but that was under a dirty peg. So, at which level do you expect USD LKR to depreciate going forward under the current exchange rate system?
Okay. Before I come on to that, I hope you will permit me to go backward in the discussion a little bit, because on interest rates, the one thing I didn't say was that as we get greater visibility on the debt restructuring, particularly the domestic debt restructuring, the very high premium we have seen built into interest rate because of the DDR will wane and will, I think, again, result in a significant reduction in interest rates going forward.
And we have already seen it happening in the secondary build-up.
Exactly. That's markets are already signaling that.
Correct.
So that will continue. On the exchange rate, so we, it is very difficult. But if those people who say that the exchange rate is going to be X or Y, I don't know how they do that, because particularly now under the flexible inflation targeting regime, if you implement it properly, the exchange rate is the first line of defense, and you have to allow it to move freely. I mean, you can intervene a little bit if there is disorderly adjustment taking place, or if you see that the movement in the exchange rate is not aligned with the underlying fundamentals in the market, then you might intervene a little bit. Otherwise, if you're going to let it go, you don't know, because it depends on the demand for and supply of FX in the market. So for that, you have to know what the inflows are going to be. So we have some idea, right? So things like flows from multilaterals and bilaterals, some idea. But remittances, again, we have broadly how much they're likely to be. But tourism, all these things, we don't know for certain what the inflow is going to be. We have an idea, but we don't know for certain. Exports, again, because particularly as there are factors totally beyond our control in terms of what's happening in our major markets, etc. Then on the other side, in terms of imports, we don't know. Now, we have to relax the import controls at some point, because not just because to promote growth you need to do that, because while these restrictions are on, there will be impediments to growth. So one is to promote growth. The other is we have treaty obligations. We have signed up to Article 6 of the IMF, which prohibits countries from using quantitative restrictions on current account transactions in the balance of payments. So imports are clearly part of that. So you can't use quantitative restrictions. You can have tariffs, etc., to create some level of protection, but certainly not quantitative restrictions. So these quantitative restrictions, at some point, will need to be phased out. So if they were allowed, we were allowed to use them because there is a provision that if there is an emergency, you can use these restrictions to help to stabilize your balance of payments and currency. But now that the IMF program has come through and as things begin to stabilize, we won't be able to sustain the argument that there is an emergency. And as we move away from that position, we would need to start phasing out the import controls. So that will lead to some increase in imports. We won't know exactly how much, but it will happen. Another factor is in terms of treaty obligations are the WTO commitments that we have made. So the import controls can't be maintained forever. And anyway, if we do maintain it, we are going to inhibit growth. So to boost growth and to meet our treaty obligations, import restrictions have to be relaxed. What the implications of that are going to be is going to be difficult to say very accurately. So then you look at both these, because you see, a lot of it also for imports is based on sentiment and confidence. If we continue to have negative sentiments and low confidence, then the level of imports are going to be much less than if people think, okay, we have turned the corner and we are on our way out, and the economy is going to start growing faster. That will again in itself boost imports through as I said, better confidence in the economic prospects of the country. So these are all kind of factors you cannot pin down exactly in terms of what's going to happen. And also, when you have situations of volatility, like you have at the moment globally as well as domestically, things don't happen in a linear way. So the exchange is not going to appreciate continuously. It is going to go up and down. Most likely, there will be volatility in the exchange rate. So in such a context, for me anyway, it's very difficult to tell you that in the near term, I think the exchange rate is going to be where it is now. In the longer term, it's going to go down to less than 300 or up to 400. I just don't know. And I don't know whether anybody knows. If anybody tells you that they know, you need to explain, get them to explain to you how they know. With all this kind of, factors which are very difficult to pin down, at any given time.
Sure. Do you think, at least in the long term, now Sri Lanka being a net importer, the annual average depreciation, do you think it would mean revert to the level where it was, 3.5% to 4%?
Well, if we run our macroeconomic policies well, i.e., if all the public finance management measures go through, right? That the new Public Finance Management Act is going to put in a lot of stuff to discipline expenditure. Then all the revenue-based measures that we are taking to enhance the government's collections. If that works well, if we run data-driven, forward-looking monetary policy in accordance with the flexible inflation targeting framework, if the exchange rate is managed in a flexible way, then the pressure on in the system will be much less on the exchange rate as well. If the fiscal situation is stable, if monetary policy is stable, then the pressure coming through on the exchange rate will be less. Now, this is why, for instance, people keep saying the Far Eastern countries are able to maintain not just a stable exchange rate, but an undervalued exchange rate through market conditions. And that is because they have very strong fundamentals. Their budget deficit is 2% of GDP or less. And they run, sensible monetary policy, which is not infused with fiscal dominance. So if you run your monetary policy well, then the pressure on the exchange rate comes off. So it could be even less, than 3 to 4% going forward in terms of depreciation per annum, because I hope we're going to have much better macroeconomic policies going forward. I'll be disappointed if it's not less.
Right.
But equally, that is trusting us to do the right thing, right? So that also you have to take a call on that.
Exactly. So in the first section of this discussion, my final set of questions about countries' growth, especially about near-term growth. Now, what do you think are the low-hanging fruit for the economy to recover? How do you think the government can induce growth in the short run, especially because in order to achieve these GSA targets also, if you look at the denominator, it's the GDP, and with the growth decelerating, that's going to be a bit of a difficult task. So how can the government induce growth near term?
Yeah, quite. You're right. The growth is crucial. If, for instance, we outperform the IMF's growth path, the growth path built into the IMF program, then it has a number of benefits. The amount of adjustment one has to do in terms of debt restructuring becomes less, and other stabilization measures also will be less pronounced than they would be if we stick to what the growth path is in the program. So everything can look better, and in terms of the burden that has to be carried by the economy and the people will be less also if the growth path is higher. So the growth path at the moment built into the program, the economy shrank by 7.8% last year. They are forecasting a 3% contraction this year, 1.5% growth in 2024, 2.6% growth in 2025, and then sort of 3% going forward. So that is the growth path that has been built into the program. Now, to me, that is a very pessimistic path. And in fact, even some of the private creditors feel that growth path is too pessimistic. The IMF's point of view is because our buffers in the economy are so limited, and we have the resilience is constrained by the fact that we have no fiscal space, or we have not had fiscal space in the past, that the external reserves are highly constrained, and given that, you have to be conservative in terms of growth, because if you build in an overly optimistic growth path, then the program will not give you that sustainability at the end if there are any kind of shocks. If there are shocks, everything will get thrown out of kilter, and we don't have the buffers to counter that. So, which is why the IMF is very conservative. That's what they say anyway. So, from their perspective, you can understand that, because we have allowed the economy to get so kind of weakened that there just aren't any buffers. In the banking system also now we no longer have buffers. At one time we had buffers, but we no longer have buffers. So on the same scale. So given that, you can see why they have been very pessimistic. Now, having said that, it does mean that there's a real potential upside on growth. If we get things right, if we get the stabilization right, if we do the structural reforms right, and of course, India is over there. What's happening in India is a critical determinant, I think, of our future growth path as well. And if India continues to grow, and like you saw in the Far East, when Japan and then China had their growth surges, all the countries in the region were able to link into their supply chains and move forward. So if the same thing happens in South Asia, then that will give a real fillip to our growth. And if that happens, clearly there will be an upside in terms of the adjustment. In fact, some of the private creditors are saying that one of the things that should be built into the program is for them also to be able to share on the upside of any growth that takes place. So my own prognosis is, provided the world economy doesn't tank and continues even at this relatively low level of growth, if India continues to grow, if we stick at it in terms of stabilization and reforms, we can certainly outperform this growth path that has been laid out in the program. And if that happens, there are potential benefits in terms of the adjustment we have to undertake, and clearly in terms of the prospects for families and businesses.
Doctor, do you think in this growth journey, do you see the state retreating from some of the economic activities? Do you think that is the step in the right direction?
I hope so, not for any ideological reasons. If you look around the world, there have been different mixes of the public and private sector in successful countries. So I don't see any ideological reason why you should have a bigger state or a smaller state or whatever. But in our case, the state has been rapacious. It has just absolutely, hammered our economy by having wrong policies, wrong behavior, poor, misconduct as well on top of everything else. So given all that, if one takes the very heavy inhibiting load that the state places on the economy and the people of this country, it has to be better, in my view. So, and the program also requires us to move in that direction, because we have committed ourselves to, having structural reforms in the energy sector, in the fuel sector, which will reduce, may not necessarily completely take the state away from those two sectors, but clearly it is anticipated that the role of the state will be reduced in those two sectors. In addition, there have been some entities which have been identified for divestment. And you look at telecom, privatizing, what was it, 45 or 48% of telecom, brought about remarkable improvement in that sector. So whether we do the rest of telecom or whether it's Sri Lankan is going to be difficult because of the debt. We may have to follow what India did, which is the Indian government took on Air India's debt, and then Tata came in and bought the airline. So, there are various options, and there is a committee, I think, headed by Suresh Shah, which is working on it, and they are making progress. And so one is our track record in terms of state performance. If the state is very efficient and does things well, then that would have been fine. I have no issues. I have no ideological thing about between the state and the private sector. But our state has been singularly bad in terms of governance, in terms of commercial operations, in terms of proper fit and proper conduct. At every turn, our state has been, I would go as far as using the word rapacious, as I said before. It has harmed the people right through many, many years now. So, in such a context, if it's playing a smaller role, clearly it will help the people and the economy.
So, Doctor, in terms of long-term growth, what do you think will drive Sri Lanka's economic growth, say, over the next 10 years? Because what we saw was soon after the war, it was the public infrastructure that have a higher multiplier effect on growth. So fast forward, looking at next 10 years, what do you think will drive Sri Lanka's growth?
Now, clearly, public investment in infrastructure, which drove growth in the post-conflict era, as you said, now no longer has much space simply because of our fiscal situation. So we just no longer have the fiscal space to have this public investment driven in infrastructure development as the main motivator of growth in the economy. So then what are the private sector areas where there could be greater scope? Tourism is the low-hanging fruit, really. I think there's considerable scope for growth. When you think that, Malaysia, in terms of population anyway, is not very much bigger than us. I mean, they, I think, attract over 20 million tourists. In the best years, we attracted 3.5 million. Of course, we have a smaller geographical area, and there's a limit that places certain limitations in terms of the carrying capacity of the number of tourists who can come in. But still, there is scope to go well above the 3.5 million we kind of were getting before 2019, up to 2018, I think. So, tourism, that's one, and of course, tourism, because of the very nature of the kind of linkages it has through the rest of the economy, does have an important impact on income distribution as well. Then the other thing is logistics. Given our location, which we have been talking about for many years, but we haven't really exploited the advantages of our location fully. So that again, logistics-based expansion of activity is something that I feel is very much possible. And when logistics means not just shipping and aviation and transport-related logistics, but also we can easily be an energy hub. If you create the refineries, etc., you can be an energy hub. You can also create other logistics related activity are possible in very much given the location, right? So that's what too. So logistics, tourism, and what we talked about earlier, which is this proximity to the fast-growing Indian economy, particularly the half a dozen southern states, which have been growing, some of them close to double digits in the last sort of decade or so. So those opportunities are there for us to grasp, and they are fairly low-hanging fruit. And even IT services is an area where we have considerable potential. Now they talk about these nomads who are working, and Sri Lanka offers a wonderful, amenable place to live and work, and digital nomads, could, I don't know, at the moment it's a small number, but again it's maybe an advantage we can tap in terms of creating space for people to live and work through improving for all this, we need to improve our overall business climate. That opens up a lot of things. Now, even for Port City, we should remember or recall how Dubai kind of developed. A lot of people talk about Dubai as an international financial center, but in my view, Dubai was really a property play, because what they did was create a world-class business environment, create a world-class living environment, and then that opened up the advantages for high-value employment to come and locate there. And of course, the international financial services is one such area. So those companies came in because there was an excellent business environment and an excellent living environment, good living space, schools for the kids, good hospitals, etc. So if you create that kind of living environment and good property space, property development, then I think you have a much better chance of getting high value employment to come and locate in Sri Lanka.
Correct. So, Doctor, with that, we come to the end of section one, topic discussion. Now we are moving to the light-hearted question segment. My first question in this segment is, what is your favorite book recommendation for our listeners?
Now I'm going to do something a bit unorthodox. In that
Okay.
I was given a book which I'm going to tell you about a book I haven't read, which I've just dipped into in the last couple of days.
Okay.
I was given this on Saturday. Uh, this is really a gentleman by the name of Bharat Lal visited Sri Lanka. He met the president, etc. His title, job title, is Director General Governance. He is Prime Minister Modi's main man on implementation. As he
Right.
himself says, the Prime Minister has a vision. It is up to us as officials to translate that vision into practical programs and projects and to have effective action. So this man is kind of at the head of the kind of apex of delivery in India. So there is a book he gave me called Modi at 20. It's Modi at, let me show it to you. I'm now doing an advert for Prime Minister Modi, it seems. But
Yeah.
it's
Modi 2020?
no, it's not. It's Modi at 20 because he
Okay.
became Chief Minister of Gujarat
Right.
in 2001.
Right.
So in 2021, when this book was published, he had been in office either as Chief Minister or Prime Minister for 20 years. And
Right.
this has a series of articles by experts, domain experts in many, many fields, focusing on implementation. And the
Okay.
title is, sorry,
Yeah.
Modi at 20, Ideas Meet Delivery.
Maybe you can
Ideas,
yeah, lift a little bit
right?
higher and okay, perfect. Right.
No, okay.
No.
Ideas Meet Delivery.
Right.
That's the
Right.
crucial part. Our president also, in my view, has very good ideas as to where we should go. So now we
Sure.
have to help him to deliver. And
Sure.
this book has a lot of insights.
Interesting. Interesting. Another common question that I ask from my guest in this segment is what helpful strategies, mental models, note-taking methods have you developed over the years to remember and retain what you read? Because I'm sure you're a voracious reader. So just trying to steal, a few tips from you.
Well, I I compare myself to my wife who reads voraciously across a whole range of things, right? I am very boringly narrow in what I read.
Okay.
I tend to read stuff related to my work. Uh, Now, for instance, I've looked at a lot of central bank governors' biographies. Not that I've read them from cover to cover, but I've dipped into them because often they talk about, crises and how they handle it, etc. So I pick and choose that. So because I read stuff related to my work, I'm kind of immersed in it, which makes it easier to remember. But of course, now that I'm turning 73, it becomes more and more difficult to remember. But yeah, one thing that has helped me is because I've been very narrowly focused. But some people would say that actually reduces the perspective you have on issues in life, makes you a more boring person. But yeah, that pretty much that really. Because I've stuck to what I do as a day job as well when I read.
Okay. Okay. So my final question in this segment is, who's your favorite person to invite for a dinner party, or in other words, whom do you admire the most in your profession?
I'm going to come out with a slightly left field name, and that's Paul Volcker, the president of the Federal Reserve Bank in the 1970s. The whole world was going through a phase of stagflation at that time, and it it was a real struggle to contain inflation, and he lifted interest rates sky high and defeated inflation and went back. You see, why I say that I have a special regard for him is that in Sri Lanka, often we forget that the central bank is not a development bank. Central bank is not there to promote development as its primary objective. It is there to create stability, to create a stable platform for development to take place. There are other government departments, and agencies, etc., which have responsibility for various aspects of development. Not the central bank. If the central bank is too focused on development, it doesn't control inflation in the way it should. It has to have a laser-like focus on containing inflation and maintaining financial system stability. Those are the two things it has to do, and not try to develop SMEs or promote tourism or whatever. All critical, absolutely critical for the country. Please don't get me wrong. I'm not trying to underplay the importance of those things, but it is not the business of the central bank, and it mustn't get distracted from its primary objective, which is to maintain price stability and also financial system stability. So that's what the new central bank bill tries to do, to focus the central bank more onto its core objectives. It can do more to do it, but it's a start. It's a significant start. So because of that, because Volcker was able to essentially overcome stagflation, overcome the extremely high inflation that was there. In the 70s, the high inflation was due to the second oil price shock. The oil price shocks had pushed inflation up, and economic activity also, because of the higher cost structure that came with higher energy prices, was also constrained. So this stagflation phenomenon was basically overcome by Paul Volcker by essentially taking a very tough line on inflation. In that, it's comparable in a way to what our governor, Nandlal Veerasinghe, is doing. When he has gone very hard on inflation. And of course, a lot of people were criticizing him, saying SMEs are collapsing, etc. But, he made a very good point. Finance costs are at most not even 10% of total costs. But if you have 75% inflation, it affects all costs. Many more SMEs will collapse, and they'll collapse much faster if you don't contain inflation. And inflation is the most regressive thing that you can do. In terms, the most anti-poor thing that can happen is inflation. Because rich people have assets which tend to, which can tend to act as a hedge against inflation, because the asset values also go up with inflation. But poor people don't have assets, so they have no hedges against inflation. So if, from the point of view of equity and from the point of view of serving the people, central banks must be absolutely focused on keeping inflation down, and when it goes up, they must be focused on bringing it down. All other things are secondary as far as the central banks are concerned. So Paul Volcker had demonstrated the merits of having that kind of approach. Of course, he, like our governor, was criticized for sending interest rates up close to 20%, etc. But it paid off, and for what, from the 70s through till now, we've had extremely low inflation, extremely low interest rates, etc.
Sure.
That's what we have to do. So that's why I admire.
Sure. Doctor, I'm keen to know, how has Paul Volcker influenced your own thinking or your career when you were in office at Central Bank? Because I've seen during your period, in terms of monetary policy communication, things improved a lot. So I would like to know how he influenced you tangibly when you were in office.
Well, in the sense that, what I've told you now, because in the 70s, I was in university or just finishing university. So it was an impressionable time in my career. And I realized how important it was, not only in terms of creating a platform for business investment, but in terms of protecting the poor, how important it was to keep inflation down. It was absolutely critical. So when I went to the central bank, um, you know, people were saying, even then, people were saying, interest rates are too high and you have to bring them down, etc. I said, go and tell the government to borrow less, then interest rates will come down. Please don't tell us in the central bank to bring down interest rates, because if we do, we'll merely fuel inflation. Look at what's happened this time, right? We had a 5% cap on our 1-year treasury bill and dropped the whole yield structure down, right? So we ended up with inflation of 75%. Of course, there were supply side factors. I don't deny that. And we had depreciation. But other countries, say in our own region, I don't think inflation went above 20%, despite the supply side problems. Ours went up to 75 because, in my view, the deficit financing was a major factor. Deficit financing by the central bank was a major factor. Not only that, by the financial repression that drove down the interest rate structure, a lot of people got heavily leveraged. They borrowed when they should not have done. And now families are struggling because they have gone and taken on too much debt. Not only businesses. So when you do this kind of distortion in the market for financing, it creates a lot of kind of flow-on side effects. So for that reason, I think that workers' very hard attitude to fighting inflation is something that left a lasting impression on my mind. But I know a lot of people, when I was in the central bank, felt I was very conservative and boring and not development oriented enough. Well, if you want development, get a development bank. And in fact, in the time I was in the central bank, around 2018, I think it was, we actually, because everybody was trying to push us into doing more development without taking into account the requirements of price stability, we actually produced a concept paper on a development bank. Because the problem about development banks is that you easily get a maturity mismatch, right? Because our commercial banks are raising deposits of mostly 1 year or not much more. And then for development finance, you have to run 5, 7, 10 years. So that maturity mismatch obviously is unsustainable. So you have to get long-term money as well to fund development banks. Earlier, the ADB, Asian Development Bank, and particularly the World Bank, used to give us long-term credit lines, 30, 40-year credit lines, which was then lent to the commercial banks, and they could use that for development financing. Not just, it was mainly to the NDB and the FCC, rather, I should say, which were specialist development banks. But now, because the World Bank and ADB stopped giving those long-term lines of credit. It is true that those banks were misused in many countries. But I think the World Bank and the ADB plus countries made the mistake of throwing the baby out with the bathwater. The problem wasn't that development banks were not good. The problem was the way development banks used were indisciplined and politicized. That happened with us too. To a lesser extent, I must say, because our two development banks were pretty well run. So that is what we need to do. Get ourselves a development bank. In fact, after that concept paper, by the way, the work on that concept paper was led by our present governor, Dr. Veer Singh. So he knows this work very well. And so if the government wants a development bank, it should go about getting a development bank and trying to mobilize long-term funding to set it up. And at that time, we were talking to the Japanese to provide us with long-term financing to support the development bank that was to be set up. But I don't know. We've had issues with Japan, but it looks like that relationship is recovering. So they may well be willing to consider this.
Sure, sure. So next question, Doctor. I can't help but ask, if you were to have dinner with your Walker, what questions or topics related to current local and global macroeconomic development would you be most interested in discussing?
I would like to get his views on the conundrum that central banks are facing around the world today.
Mm-hmm.
That is, on the one hand, inflation is proving sticky.
Mm-hmm.
Everybody thought that this bout of inflation was transitory. It is turning out to be much more persistent than originally anticipated. So we need to increase rates, and the central banks have been doing that, and quite aggressively, the global central bank. But then now we have this financial system instability, and we need to make sure that there is an accommodative monetary environment to support the financial system to get through this. So there is a real problem that central banks are facing. Do you increase rates to fight inflation, or do you reduce rates to protect the financial system? So that is something really in the coming kind of few months would need to be resolved. And I'd like to hear what Volker would have said, with its strong orientation towards fighting inflation, whether he would have said, well, banks will have to look after themselves. I don't know, but you can't do that either. So how do you strike that balance? How do you strike that balance? That's probably the crucial issue for central banks right now.
I guess. I mean, I wish if I could, join that dinner table to listen to the two of you. Okay, Doctor, my final question. I mean, this is also a common question I ask from my guest. Well, are you a good cook? And if you were to host this person over dinner, what you will be serving him, or / what will you be cooking for him?
So now you are going to expose my incompetence. I went to boarding school at the age of 13. So I left my mother's cooking at the age of 13. Despite that, I can't cook. Mainly because one is that in boarding school you were given food. It wasn't great because I was in boarding school in the UK in the 1960s, and food in Britain in those days was horrendous. It was just boiled meat and boiled vegetables. It has improved significantly now, mainly because they've embraced cooking from all around the world, not these curries. But at that time it was horrendous. But despite that didn't incentivize me to learn cooking. Then at university, I was fortunate to meet my future wife, and her, what I think are very good cooking skills, kind of have supported me through the subsequent 50 odd years. So I've been let off the hook, so to speak. So I don't cook. I can, at a pinch, fry an egg or make an omelette, but nothing beyond, or just do some sausages and bacon. That's it. That's my cooking.
Okay, that counts. So thank you very much, Doctor. So with that, we have come to the end of today's discussion. Again, thank you so much for sharing your knowledge. This has been an absolute pleasure. Extremely, so very grateful to you. And I look forward to talking to you in another future episode. Thank you so much, Doctor.
Thank you very much. Thank you. It's a pleasure too. And thank you for your very good and probing questions. Thank you.
Thank you, Doctor. And dear listeners, thank you for joining us. We'll talk to you again in another episode.